Yes, it pays to have good credit.
You would always want to be on the side of having good credit.
Do you think it pays to have good credit? Welcome to the It Pays to Have Good Credit podcast, where we talk about credit scores, business, finances, and take calls to answer all questions related to those topics. To call in, call 225-243-9700 and press option 1 to join in. All right, this is going to be a very fun topic to kind of give some pros and cons on. So for those who are watching this episode on YouTube, you can kind of see I have a chart here. I didn't separate the pros and cons just because I just kind of quickly scribbled this stuff on here so I can remember what to talk about. But for those who are listening to Spotify or any of our other audio platforms, just kind of follow along. So the topic of car buying: should you pay cash? Should you finance through a dealership? Or should you finance through a credit union? Those are some of the most asked questions, or mainly the three most asked questions when it comes to buying a new vehicle. And by new, I don't mean like brand new, but like adding a new vehicle to your driveway, or for a child or family member, whatever the case is. But those are usually the same three questions that's asked every single time. And look, I know many people, especially those who are on the old school traditional side of things, of just paying cash for everything, or the debt-free Dave Ramsey crowd. Look, if y'all are like that, you know, this is not a discussion for y'all when it comes to the finance options. I completely agree and understand what you guys are doing when it comes to not being in debt. I get it. Now, let's just go through all three just to go over some things here. So first and most importantly, let's talk about cash options here. Okay, so buying a car cash. Let's just say if you are one of those people who are struggling financially, no, you do not need to take on new debt, because when you add new debt, that's going to subtract from your monthly revenue. And you know, your car payments, if you have a $500 car payment, that can go towards bills and things like that, or building wealth. You can invest that $500 a month. Look, I totally get that. Now, I'm only talking to the people who can afford to buy a brand new $80,000 truck cash. You know, if you fit that scenario, then yes, don't get in debt. Go buy it cash. Now, for you people who are struggling and your money is tight and you only have $1,000 or $2,000 in your savings account, then yes, you need to look at some financing options until you can save enough money and pay it off. Now, when it comes to financing, don't go and get no car that's out of your league. Still get a cheap car. So that way, when it is paid for, you know, you didn't invest $30,000 in a car. You know, look for something that's $15,000 used, and you can pay it off within a year or two. So that's kind of where I'm getting at. So let's go over some of the pros and cons of cash here. So cash, buying a vehicle cash. Let's just stick to the average American cash buying car. Let's just say this is a $5,000 car. Okay. Number one, a good thing, you're not going to be in any debt. So you have transportation to get you from point A to point B. Your insurance is probably going to be a whole lot cheaper. And, you know, you're not going to be in debt. That way you keep your monthly revenue. You know, as far as one of the cons with that, if it's a $5,000 car, be expected to pay repairs. This car will not have a warranty. Now look, the point of buying a car cash, and this is where it gets tricky. The point of buying a car cash is so you will not be in debt if you're already struggling with your finances. But here's the thing. If you just dump your whole savings account on a car, and then 2 months later the car broke down and it needs a new engine, and that engine is $5,000, well, guess what? You're screwed. So you take a risk. So whatever you do, whether you buy a car cash and it's a piece of junk and it can potentially break down by the end of the year, especially when I worked in the car business and car sales, This happened every single year. People get their income tax, they come and buy these $3,000 cars, and then next tax season, when they get their income taxes, they're back at the dealership again buying another piece of junk that's only going to last 10 months. So that's very important. So look, yeah, saving money on debt and not getting in debt is very good. I highly recommend it. But please consider everything that you do financially, whether you spend cash or finance cash, it is going to be a risk. There is nothing that is guaranteed to be a risk-free situation in life. Just, drinking too much water is a risk. You can die, however, you need it. So that's my thing with that. And again, the repairs part is only relating to the people who are looking for those $3,000 or $4,000 or $5,000 cars. If you dump your whole savings account and that's all you had to your name, I wouldn't do it if it was me, because what if something goes wrong? I can't afford to fix this junk once it breaks down, because now I got no money to my name. So that's the crowd I'm talking to. Now, if you're watching or listening to this and you have $1 million in your bank account, yeah, go buy your $100,000 Escalade or Denali trunk cash. Yeah, sure. Now, next, dealer financing. We're moving on to the financing side of things. So we got dealer financing and credit union financing. So our customers or any consumer out there who are interested in financing a vehicle, these are your two questions. Should you finance through the dealership, or should you finance through a credit union? So let's talk about dealership financing, pros and cons, okay? One of the bad things about dealer financing, they're going to shop your credit around to multiple different lenders. By the time you leave that dealership, you may have 20 new hard inquiries on your credit report, and each inquiry could potentially drop your score 2 to 5 points. So you may go to a dealership, run your credit, and then when you leave, your credit scores may be 30 points lower because of these new hard inquiries that's on there, and they report for 2 years. So that's something to keep in mind. However, by being in a car business for so many years before I started Sturgis Credit Repair, I understand that you probably have more options when it comes to financing. For example, when you run your credit, you have all lenders in your hand that are trying to compete for the best rate, give you the best down payment requested. One lender may want you to put $1,000 down and the interest rate is 5%. Another lender may want you to put 0 down, but the rate is 8%. And then you may have another lender that may be willing to do 0 down and the rate's 3%, but they want proof of income. So you can choose which options make sense to you, and you have way more options to go and things like that when you do dealer financing. Okay. Next thing, you're in one place. When you go to the dealership, you don't have to go to multiple places, wait multiple days. It's a one-stop shop. You run your credit there. 10 minutes later, you got your approval. You go in there and look at the numbers, and you make a decision right there. Which lender got the best deal? If it's worth it, if it's screwing you over, if it's costing you too much monthly, walk away. So that's what it is when it comes to dealer financing. Let's see, what else did I miss off? I'm just reading it off the top of my head. Secondly, let's see, 9 times out of 10, if you're doing dealer financing, you can potentially get a newer car which has a manufacturer's warranty, and safety ratings is more better than a cash car that's $5,000 and that can run off of the road by the end of the week. So if you are sending a teenager to school, to high school or off to college, you may not feel comfortable buying them a $3,000 car, although they're not going to be in debt. But maybe you as a parent, maybe you make stable income, and you can't afford to drop $20,000 out of your savings on a vehicle. However, you can afford a $300 car payment. Then if that's the case, put your son or put your daughter in a more reliable vehicle that has a warranty. So if something breaks in the car while they're in college, it'll be fixed for free. They don't have to come out of pocket for a new engine or a new transmission or new drivetrain or anything crazy that make and break on these vehicles these days, because they're getting expensive by the year. That way, you know, you don't have to worry about them breaking down on the side of the road, going to school, they're late for class and things like that if they were to buy a $5,000 cash car. So that's something to keep in mind. Something else, if you're a business owner, okay, and you're looking at a $50,000 truck, and you have the $50,000 in your bank account, but your decision is, hey, should I finance this vehicle or should I just pay cash and be in no debt? Well, maybe if you apply for financing, the interest rate is 3%. But if you reinvest this money, this $50,000, and buy more inventory or use it for marketing, maybe the return on your business may be 20%. So that way you can make, you know, multiple times more money by keeping your money and investing it in smarter ways than just putting it towards a vehicle that's going to decrease in value the second you leave the lot. So that's something to think about. And then last but not least, I had something else on there. Oh yeah, that's very important. Rebates. So when you go do dealer financing, sometimes the manufacturer may give rebates. If you finance through that dealership's bank, or not the dealerships, that manufacturer's bank, like GM Financial or Ford Finance or Toyota Financing, a lot of times they may offer 0% financing. They may offer $5,000 extra if you finance through them. Now, of course, the rate is probably going to be higher if you get some type of reward for financing. It's always a plot twist, but you could just pay it off sooner if cash was ever an option for you. So those are your options for dealer financing. Now, let's talk about financing through your credit union or through your bank, because you don't want to use dealer financing. Okay, if you do this, there's a few pros and cons with this as well. One, you're only going to have one hard inquiry added to your credit report. You know, so you're just going to your credit union or to your bank and you're running your credit that one time. You're not sending your credit off to 20, 30 different banks like a dealership would do. You get that one approval and you're good to go. Now, that can also be a bad thing. Whatever your credit union or your bank approve you for, that is your offer. You know, they want you to put $2 grand down, $2,500 down, $5 grand down. That's what you got to work with, because you only want to finance through them. If their rate is 8%, then you're going to stick to 8%. A dealership lender may can beat 8%. So you're kind of limited on some of your options here with credit union financing, but kind of the same thing as far as the pros. With credit union financing, you can potentially get a newer car with better safety features opposed to buying a $3,000 junk car. You can reinvest your money that you would have spent on a cash car and made more money if you're a business owner, you know, things like that. But honestly, there's no right or wrong answer here. I know a lot of people in the credit industry, they're going to lean towards financing, and then a lot of people who are in the debt free industry, like the Dave Ramsey audience, you know, they're going to preach be debt free, because that's how they make money, by training people how to become debt free. So their main audience are the people who are looking for this $3,000 car, you know, so they're not out there focusing on marketing to business owners who can use cash to reinvest in their business or reinvest in some type of investment to earn more of a return than what the interest rate would be on this vehicle here you were to finance. So honestly, like I said, there's no right or wrong answer. There's pros and cons to paying cash, especially if this cash car means like a $3,000 or $5,000 car. There's pros and cons with dealer financing, and then pros and cons with credit union financing. And then I think the last thing I left off of credit union financing, 9 times out of 10, you have to wait 2 or 3 days just to get your approval from the credit union. You know, a lot of times they're slow at emailing. They may say the loan officer called in sick today, so you have to wait an extra day or so. When you do dealer financing, all of that crap is automated. They submit your information, and then those lenders pick up your stuff, and there may be a human that actually override things. But outside of that, you know, that's really it when it comes to what is the best option out of these 3 buying methods here. So hopefully you guys learned something from this episode. Maybe something on this chart here made sense to you, maybe it didn't. Comment on this video if you're watching. I believe you can comment on Spotify too, but let me know your opinion on things, whether you should buy cash or if you should use a dealer financing or credit union financing. Let me know your experience, please. If any of you have ever decided to pay cash instead of finance, or finance instead of pay cash, let me know how it helped you financially. If you use credit to improve your lifestyle and would like to share your story on the It Pays to Have Good Credit podcast, feel free to reach out to us at info@sturgiscreditrepair.com. Sturgis is spelled STIRGUS, creditrepair.com.